Here we have the 30-minute price chart for Apple Incorporated, stock ticker AAPL. Here we can see that the stock is moving to some very significant new highs. We did manage to form a base near the prior support zone that we outlined for this stock. Prices have started to move higher, and for many people, this is really going to complicate things because stocks trading at all-time highs are much more difficult to trade in many ways. Many people try to get in a bit late. They're buying in at upper levels because that's where you are by definition. If you're at an all-time high, you're trading at levels that haven't been seen before. And you're not exactly trading at a discount price at that point. So it does make it more difficult to find position entries that can really lead to strong profits. And many people do try to get into these stocks way too late because the headline is Apple reaches new all-time highs. We've also been seeing what's been going on with Nvidia, and many people probably are under the assumption that all of these stocks are just going to continue rocketing higher forever. Um, all of that said, this is a very clear break here, and we did manage to identify the prior support zone for this stock, which really came in just above 206. We would call this roughly 206.80. We can see that the prior lows here came in around 206.59, so 206.60 roughly. And the reason that we were pointing out this level, the reasons here are important, and this level is going to become very important to the downside going forward because this is new. Essentially, this is new. This is the new level to watch to the downside, and will help traders identify whether or not we're starting to see a long-term top in place. So quickly, we'll just go over why this level was so important, and why this level did lead to the new base that sent prices to the all-time highs. So, first, for the most part, we were looking at the prior rally that was occurring near the Worldwide Developers Conference. This is when this major move higher really kind of was triggered. Um, we did see prices move from the low 190s. Okay, so we can say roughly we're trading at 192.15. This is the low from June 10th. And then we saw highs just above 220. So the high ultimately came in at 220, $220.20 for this prior upsurge in share prices. So if we're looking at that as a prior dominant move, as the prior dominant bull wave, we can see that prices retraced roughly 50% of that move. We came right back down to the 50% retracement, which is the level that we were pointing to. And this level came in at 206.09. So you have to take that into combination with the fact that we did have a historical support zone there, and the 200 period exponential moving average is also falling in line roughly with this area. So we have a confluence of indicators here that do point to this level as it being a strong reversal zone. In addition to that, we do have we were starting to see a downtrend in momentum, and at least in the momentum reading. There was some downside momentum in share prices, but the downside move in the share price itself was a bit weak. I mean, we did retrace half of this move, so that's not exactly insignificant. And this did provide sort of an opportunity for traders to start to scale back into these positions after some profit taking was being seen at those 220 highs. So we did see half of this move retrace. So that is a fairly substantial move. It might not really look so substantial on this chart because of the way that it's kind of drawn out here, but we can see here that it is the 50% retracement of this dominant bull move, and this was the trending move that sent the stock to its prior all-time highs. So as this was occurring, we were starting to see downtrend momentum develop for a while until this started to end. Let's see. We can see the upside break here occurred on the 1st of July. So this downtrend in share price momentum really kind of ran its course and completed on July 1st. So at that stage, we're seeing a new trend activity start to develop. And given the fact that we were able to form this base here at 206. All of this provided enough of a launching pad for the stock to start to move higher. So currently, this is the level to the downside to watch. If we did see if we did start to see prices fall and we did see a break of the 206 level, this would be reason to believe that this uptrend here is starting to reverse, or that a medium term top is in place, something along those lines. But until that happens, the momentum here and the bias here is clearly to the top side. But we're going to be looking for dips to buy. We don't want to just be buying at the all-time highs, because that's the news headline. That's never a good idea. That's the easiest way to lose money, and it's the easiest way to lose money in an uptrend, which is like, the cardinal sin of the market. I mean, that's really the worst thing you can do. If you're buying into an uptrend and somehow still losing money, that's, it doesn't get worse than that. So what we will want to be doing here is looking for dips to buy, potential shorter term retracements here. Let me get rid of this line. And the first level that I would be watching comes in at roughly 215. I would be pointing to this level here. We've got a bit of prior support here, and this area does come in line with the 100 period exponential moving average. So we have a few different indicators working in combination with one another that would kind of point to this price zone as a potential target for new long positions. Currently, we're trading at 221.51, so that's roughly $6.50 below here. I would not recommend buying in this area. I mean, we are moving into overbought territory as well. So, I don't want to buy at all-time highs, just because I think prices are going to move higher, especially with a stock like Apple. It takes a lot more money to move share prices. And when you see a move like this, it does suggest that most of the money has already been committed to positions. So from here, we do need to also look at some upside targets. So to the downside, we do have this 206 level as a potential buy zone. But where are the upside targets here? So here we're going to pull out to the monthly chart, and we're going to look at some standard deviation levels that can be found on the longer term time frames. Okay, so here we can see that we are already trading on the outside of the monthly Bollinger Band. This is another reason why I would not be buying this stock at right now. I would be waiting for a retracement lower. You should get an opportunity to do that relatively soon. But longer term, what would the price targets be? Okay, so here we can see that if we go into September, the upside price target comes in closer to the 230 level. When we're looking at certain standard deviation levels, but the ultimate target here, if we're going out a little bit in time, I mean, the way that we have to do this analysis is to kind of push things forward in time. And here we can see that, the first standard deviation target comes in at roughly 230, just above 230. This would be for the September, October trading period. But if prices are able to make a more extreme push, we would expect to see prices actually break the 250 level and still be within the standard deviation targets. So there are kind of two potential levels here that should be watched, just above 230 and just above 250. If we're looking kind of into the next quarter as a potential price target for the next quarter. So these would be the standard deviation levels, but I would not be buying currently, because we're currently trading outside of the monthly Bollinger Band, and that does suggest that prices have really moved a bit far for the moment. I would be looking for a retracement back to 215, and then targets at just above 230 and at just above 250 in the months ahead, in the coming months. So this is the current price analysis for Apple Incorporated, stock ticker AAPL.